According to ACCA, most current AI tools can't meet our profession's accuracy and reliability demands. Out of the 5 levels of agentic AI, only one can, and knowing it could give your finance team the edge this year. This isn't hype. Agentic AI is the next evolution of artificial intelligence, designed to work like a human colleague but with superhuman capabilities. In the next 9 minutes, you will see what agentic AI actually means for your daily work, which level present the biggest opportunities for finance teams today, and why some levels might not be ready for the accuracy demands of our profession just yet. Let's start by defining what we mean by agentic AI, because this isn't just another buzzword. It's a fundamental shift in how AI works. Traditional AI in finance is reactive. You input data, it gives you an output. Think of your current expense categorization software or basic fraud detection systems. They follow rules you've programmed. Agentic AI is different. It's designed to act purposefully with new information, learn, react, and automate processes in real time, almost like having a digital finance colleague. Here's a concrete example. Imagine it's month-end close and your AI system notices an unusual variance in your travel expense category. Traditional AI will just flag it as an anomaly, but agentic AI investigates further. It reviews recent travel policies, cross-references with HR data about new hires, checks if there were company events, analyzes historical patterns, and then either resolves the variance automatically or drafts a detailed memo explaining the discrepancy with recommended actions. That's the power of agency. The AI doesn't just process, it investigates, reasons, and acts with purpose. To understand where we're heading, I want to share a framework that's becoming the industry standard. This comes from Bonnet, Barkin, and Waits in their 2015 book, Agentic Artificial Intelligence, Harnessing AI Agents to Reinvent Business, Work, and Life. They've identified 5 distinct levels of AI automation that every finance professional needs to understand. Level 1, Rule-Based Automation. This is where most finance teams started. We're talking about tools like Zapier, IFTT, and basic integrations. Your ERP automatically posting journal entries or your expense system routing approvals based on dollar amounts. It's rigid, predictable, but limited to exactly what you program it to do. Level 2 is intelligent automation. Here's where we see tools like UiPath, Microsoft Power Platform, and IBM Solution making their mark. These systems can handle more complex scenarios, processing semi-structured invoices, extracting data from various document formats, learning patterns in your approval workflows. Level 2 is where many progressive finance teams are operating today. Level 3, agentic workflows. This is where things get interesting. At level 3, we're integrating natural language understanding with the ability to reason and orchestrate workflows while learning from feedback. Think of AI systems that can interpret complex financial requests, understand context, and execute multi-step processes autonomously. Current examples include advanced chatbots like Relevance AI and Microsoft Copilot in more sophisticated implementations. Level 4, we have the semi-autonomous agents. Now we are entering truly agentic territory. These systems operate with multimodal perception. They can analyze documents, images, audio, and data simultaneously. They are continuously learning from experiences and can adapt their approach based on new information. Deloitte suggests that AI finance agents will be a transformative force in accounting, moving beyond traditional automation to incorporate human judgment into financial decisions. In level 5, we have the fully autonomous agents. The ultimate goal is a complete environmental awareness, independent goal formulation, and advanced reasoning that enables continuous learning. While we're not there yet in finance application, the potential includes AI systems that could independently manage entire financial processes, from budgeting to reporting with minimal human oversight. Now, here's the critical insight for finance profession, and this comes from ACCA's recent analysis analyzing AI impact on tasks and roles. They state explicitly, in practice and for domains where accuracy and reliability is critical, like accounting and finance, Level 2 still presents the most immediate opportunities. This isn't just theoretical advice. It's based on the practical reality of what works in finance environments where a single error can have massive consequences. Level 2 intelligent automation is technologically mature and widely deployable. We're seeing successful implementations across finance teams using tools like UiPath, Microsoft Power Platform, and IBM solutions. These systems can handle complex scenarios like processing semi-structured invoices, extracting data from various document formats, and learning patterns in approval workflows. The key advantage? Level 2 maintains the human judgment that finance demands while delivering immediate ROI. You can automate repetitive tasks like data entry and invoice processing across payables, receivables, and general ledger processes. But critical exceptions still route through human verification. This is the sweet spot. Sophisticated enough to handle real complexity, reliable enough for finance accuracy requirement, but still maintaining the audit trails and human oversight that compliance demands. So, why aren't level 3, 4, and 5 ready for finance applications? It comes down to 3 critical issues. First, explainability. As AI systems become more autonomous, understanding their decision-making process becomes nearly impossible. In finance, where every decision needs justification for auditors and regulators, this black box problem is a compliance risk. Second, the magnification effect. While a human might make a few errors daily, a highly automated system processing thousands of transactions could amplify any single error exponentially. When you're dealing with financial data, this risk is unacceptable. Third, domain expertise requirements. Finance decisions require contextual understanding that only comes from years of professional experience. Level 2 systems provide intelligent automation while preserving the human expertise that's absolutely critical for complex financial judgments. The bottom line, higher levels of automation might sound impressive, but they're not ready for accuracy, the auditability, and reliability standards that finance demands. Quick question. What's your biggest manual finance task right now? Invoice processing? Expense categorization? Month-end reconciliation? Drop it in the comments. I guarantee level 2 automation can solve 80% of it. And if you're already using intelligent automation tools, tell me what's working. The adoption rates are still surprisingly low in finance, so your experience could help others make the leap. If this breakdown of agentic AI levels cleared up the confusion, hit subscribe and the bell icon. In the next video, we'll explore specific level 2 tools with real ROI numbers from finance teams achieving 70% efficiency gains. The AI transformation in finance is happening now. Lead it or get left behind. See you in the next video.